How to finance your holiday let? That is a very good question, and in this video we're going to look at how you stay and also invest in the staycation boom of holiday lets. The UK staycation trend has surged in recent years post-COVID and during COVID, making holiday let investments increasingly attractive. However, financing such properties differ from traditional buy-to-let arrangements. This video explores lending options for holiday lets, and we look at affordability calculations and other tips to maximize profitability. It's really important to understand holiday let mortgages because they are different. A holiday let mortgage is designed for properties rented out to people who are on vacation and are rented on a short-term basis. Unlike standard buy-to-let mortgages which cater to long-term rentals, holiday let mortgages accommodate the unique income patterns associated with short-term lets. Lenders will assess potential rental income across peak and off-peak seasons to determine loan eligibility. The key lending criteria is that some lenders will lend up to 75% loan to value of the purchase price. This is going to mean you're going to have to find a deposit of at least 25% of the property's value. The most important thing with holiday let mortgages is the rental income assessment. Affordability is calculated based on the property's projected rental income. Lenders often require that this income covers a specific percentage of the mortgage payments, considering average rents across different holiday seasons. Your own personal income will also be assessed. Some lenders will require evidence of a minimum personal income to ensure you can cover mortgage payments during periods of low occupancy. The property usage is another important factor because the property has to be available for rent for a minimum number of days per year, and personal use may be restricted to maintain its status as a commercial holiday let. This will depend upon the lender. Affordability calculations differ. Lenders will use various methods to assess affordability. The rental coverage ratio. What do I mean by that? Well, lenders may require that the projected rental income covers a certain percentage of the mortgage payments, often between 125 and 145%. What does that mean? Well, if your mortgage is £1, then the rental income will need to be between £1.25 and £1.45 to cover the mortgage payments. So if it's £1,000, that will mean £1,250 to £1,450 of rental income to support your holiday let mortgage. With occupancy assumptions, calculations might assume the property is occupied for a set number of weeks per year, with income projections average across peak and off-peak seasons. Maximizing profitability is important. This will enhance your returns on your holiday-led investment. The most important thing I have learned is location, location, location. When you are buying property, location is everything. So where you select to have your holiday let investment is vitally important, both for liquidity in the future if you need to sell quickly, and also achieving the very best terms in the marketplace. It's important to choose areas with high tourist demand and all year round appeal to ensure consistency in bookings. Quality furnishings. Invest in durable, attractive furnishings to enhance guest experience and justify premium pricing. When marketing your holiday let, utilize professional photography and compelling listings on popular platforms to attract guests. One of the key things I've learned that Airbnb went from zero to hero due to the photography and hiring professionals to take the photos. Another thing that I have learned with holiday let mortgages is the importance of dynamic pricing. What do I mean by that? Well, as you would suggest with dynamic, you need to adjust the rental rates based on seasonality and local events to optimize occupancy and revenue. Most people when buying always look for some sort of validation that they're doing the right thing, so guest reviews is vitally important as well. Encourage satisfied guests to leave positive reviews, boosting your property's credibility and appeal. In summary, investing in a holiday let can be a lucrative venture, especially in the current staycation climate. Understanding the specific mortgage requirements and implementing strategies to maximize profitability are crucial steps towards success in this market. As always, I am asked many questions regarding these types of mortgages. Some of them are like, can I use a standard buy-to-let mortgage for a holiday let property? No. Standard buy-to-let mortgages are specifically meant for long-term rentals only. Holiday let mortgages are specifically designed to accommodate the unique income patterns of short-term rentals. Are holiday let mortgages regulated by the Financial Conduct Authority? No, they are not. Holiday let mortgages are not regulated by the FCA. It's advisable to always seek independent financial advice to ensure suitability when arranging these types of mortgages. A member of my team is always available to help. What is the typical deposit required for a holiday let mortgage? That's a very good question. Lenders usually require a minimum deposit of 25% of the property's value. Can I use my holiday let property for personal vacations? Yes, you can. Many lenders will allow personal use provided the property is available for rent for a minimum number of days per year, and this will vary from lender to lender. How is my rental income assessed for affordability when arranging a holiday let mortgage? Lenders assess projected rental income based on average weekly rents across different seasons and may require it to cover a specific percentage of the mortgage payments. This will vary from lender to lender, and as you're a unique individual, the lender's appetite for risk, locations in the country and the world vary, and as a result, this will determine the maximum loan to values that are available and also the terms. As always, thank you so much for watching this video. Please remember to like, subscribe, and if you have any comments, please do so below. Thank you for watching.